Good morning. I'm going to try this one more time, but having some technical issues again this morning. So it's Thursday, May 22nd. Uh, I wanted to show you all something that's a technique that I use that works really consistently, as consistently as anything works in the stock market. So we had a big run down pre-market, and then we got a jobs report in. And the jobs report is this whole move. After the jobs report, we got this move here. And as you can see, that's not the most natural of trading. That's just green bars almost completely, which is very unnatural. So it looks a bit like an algorithmic buy program, which it may or may not be. But nonetheless, from the jobs report, we had this huge up move. Now, when you get a huge pre-market up move like this, a lot of times the market will pull back to the 50% point of that and use a Fibonacci retracement. And I do not trade Fibonacci retracements, nor do I would strongly suggest you not base your trades on Fibonacci retracements as a general rule. However, in this particular case, this is something that does generally work is big pre-market move up or down. And so I measured from the top of this wick here to the bottom of our candle where the news came out. This purple line was the 50% point of the halfway point of that move. We also happened to have a little order block right in here, which was helpful. We had a couple of order blocks right here. So I drew that line, and this is about typical. The market will usually penetrate that 50% mark slightly and then move back up. And that happens quite often on news-based moves that occur pre-market. Sometimes if it's a really strong move, if it's 1,000 points or something, okay, it's not going to happen. But here we had a 150, 200 point move. So it depends on the move, but on a move that's not too big, a lot of times you'll get this pullback. I took one pre-market trade in here, lost a little money. The market, as it opened, just kind of sat there. It was kind of odd. We started up, and I took a trade on the as we broke the high of this candle. I took that, and I got 10 points. I did make some losing trades this morning, had a couple of losing trades, but I was never actually in the negative. I stayed positive the whole time. I actually shorted this. This went up and then came down, and I shorted this bar as it came back down, and then it shot on up. However, I got stopped out. However, when this bar here rejected, I doubled up, took two contracts, and I got 10 points on that. So that was a really good trade. Then we started chopping around. Now, one thing you have to do as you trade is you have to keep the big picture of what's really going on. We had this big pre-market up move. Okay. Uh, we had the 5 minute and the 15 minute had moved up above the moving average and were right on the moving average. So we pulled back to the 50% and stopped. So you see all this moving around in here, but what I did was I kept the big picture of what was actually happening, and that is that we had a big up move. We had pulled back to the 50% level, and now we're chopping around. And so that's really important to kind of keep the big picture of, hey, this is probably really going to go up no matter what they're trying to make it look like. It's probably going to move to the upside. So uh, I bought right in here, uh, and I hung on, and I got 20 points here. And then I got out and called it a day because we still had a lot of chopping going around. Now, as you can see, the market shot on up, and it's easy to say, well, you should have stayed in. You could have made a lot more money. That's really not how this works. You have to get in, get your money, and get out. You do not want to keep trading once you've had a solid, profitable day. It's just not the way that professional traders trade. You get in, you make you some money, and you get out. And that's just the only way you can do it. The more you trade, the less money you're going to make. And most really good traders are only right about 65% of the time. And what you'll find is that you can keep trading, but you really won't make more money. So it doesn't generally do you any good. Once you hit that 65% success rate, most days, no matter how many trades you make, you can lower it from that, but you're not going to raise it from that. So So anyway, I just wanted to teach you guys about this Fibonacci retracement, the 50% off of a pre-market move. And, you know, this is pretty choppy and I got taken out a couple of times, but I finally kind of caught myself and said, hey, you know, this is going to go up. They're going to push this up. So I got on the right side of it, made some money, and, you know, sure could have made some more, but hey, I'll take it. We ended up at $419 per contract today. So there will be no trading tomorrow for me. I'm going out of town, and then Monday is a holiday. So we'll see you guys next week on Tuesday. And I hope maybe this stuff is helping you learn something about how the markets work and how I make the decisions that I make. We'll see you guys next week.